McGuire, CEO, AustraliaTrading.com, joining us live from Sydney. Great having you here, Peter, as always. Give us a sense, this $98 per barrel, I don't think most of us were penciling that, right? And even the analyst community, most of who we spoke with, including yourself, may have found this move a bit surprising.
Absolutely, Hirsch. I tell you what, it's been dramatic when we think, put your mind back to the start of the month, you're at $70 and now at 98. I think we had a high in only a last hour or two, about $98.40. So it's, nudging closer to that 100 target. The other day it was at 88. I just can't believe the velocity and what we've seen as far as market sentiment. Everyone's bidding it up and it's just been dramatic. And I understand the situation. We've lived through this together for the last number of months, and it's really starting to, I think, get on everyone's nerves as far as how does a deal get, piecemealed together, and does it actually derail further in the likes of, Bab el-Mandab and the issues with the Red Sea also.
Peter, therefore, if this is a bit of a surprise, we saw 95 on the barrel earlier this morning, and it's crept up to 98. What seems to be the concern, in your opinion?
Well, that is the issue. Everyone's long. So from a trading perspective, everyone's bidding it up because they're just, it's no one wants to be short. And when you've got these sort of hyperdrives that you see over a small window of time, up 5 and 7 and 8% in a trading session, it builds momentum. And when you're putting your mind back to the start of the month, we're up 40%, Hirsch. So, we're understanding as far as the positioning where President Trump is saying that he's, to hit Pickaxe Mountain. Also, that if he sees any work at all from the Iranian ships or their Coast Guard to attack ships in the Strait of Hormuz, he's going to, dramatically increase infrastructure hits to power plants and, of course, to bridges. So this is really war talk. And I think that that's one of the main frames that everyone's thinking about, the surging price, and no chance of really looking like there's going to be a deal anytime soon. And
Peter, this is all the news and the noise, right? Let's just trying to filter that out. 20% of global crude comes out of the Strait of Hormuz. If there were to be a pause on say a part of that, what would that percentage be, which comes out and which doesn't, broadly, in your opinion?
Well, you hear so many different themes, but I understand that the US is not going to let anything out through there at the moment. So if there's going to be just dramatically cut off supply, then that's going to, again, how long does that work for? Is that a matter of days or is it going to be weeks? We're moving into August and really it's demand season and driving season in the States, and as far as the world's concerned, it's really, summer peak consumption from all forms of air conditioning. So I sit here and I think maybe if it was to be a piecemeal together and you were going to see some form of resolution, we would have seen that sometime this week. That hasn't happened. And so that leads me to the other side. It's going to actually increase as far as price movement to the upside and probably make it tougher to get ships through the strait completely.
How should one, I'm very curious to know, therefore, say 20% of global crude doesn't come through, but there are now strategic petroleum reserves, which lots of countries have, right? You've got Japan having it, the EU also building it. May not be as large. The US obviously has been depleting it. I'm sure Japan also has depleted it. But the reserves have been fairly large. For example, my understanding is Japan has 250 days of reserves in terms of crude at the start of this this conflict that happened in March. Give us a sense now, how much would those reserves have been depleted broadly by? And is there enough buffer or cushion? And if so, for how many days, weeks?
Well, I think there is enough buffer and cushion. I read the International Energy Agency in the last couple of days, Hirsch, and they were mentioning that there's a billion, that's with a B, a billion barrels of crude as far as in reserves. And that's across many different nations. So that gives you a level of comfort. But the other side is what happens as far as price and whether you're going to see outages and there's going to be issues as far as ships getting through. Also, the next part of it, the impact as far as inflation, supply chains, all forms of the logistics, the footprint of that. It's hard to determine how much supply is out there that can buffer this situation. But the more it drags on, there will be an inflection point, then that will drive price significantly higher if we break that inflection point. And only, that's a work in progress.
And a lot of these, there's also an incentive to dilute down on this 1 billion SPR, right? Barrels of SPR, right? Because they bought it at a substantially lower price. And you're selling it at $100 a barrel. Why? That's not the intention, but you still made a disproportionate gain just selling that SPR. And if for example, it is $1 billion, billion barrels of crude, then that takes care of nearly 2 months of conflict. If at all 0 barrels move out from the Strait of Hormuz, is that the right way to think of it?
Well, I think that may be a little bit of a stretch as far as that period of time. We are consuming the best part of 100 million barrels a day. So, it's only really, if you're using 100 million barrels a day, it only takes 10 days to move to use that billion. But there is plenty in reserve out there in other markets. So again, it's going to be, I think, a matter of weeks, if not a month or two, until there is really that inflection point. And, again, what happens as far as Saudi oil? What happens as far as other suppliers? Where does China position itself in this? Where do the likes of India and its reserves? What happens with Venezuelan crude? Is there going to be other markets that can come to the fore and can fill any gap? Where does OPEC position itself? So again, this is multidimensional. It's very hard to critically, to the minutiae, trying to break this down, because now there is a point in time, America is a powerhouse when it comes to crude production. So all of these factors need to be also considered. But the underlying issue, Hirsch, is at $100 a barrel, that is not what the world needs, certainly from inflation and naturally from a GDP perspective.
Peter, I'll quickly just try and dissect that. So you said 100 million barrels of crude daily, out of which 20% comes from the Hormuz. So I'm looking at a 20 million barrel a day hole, which takes us around 50 days in terms of the 1 billion barrel reserve that we have. So that's right. So essentially, I'm assuming that none of the other outlets of oil come on stream, and without that too, we should be okay for maybe a month and a half. And therefore, this could well be a knee-jerk reaction. Is that probably the right way to think of it?
Well, I don't know whether it's knee-jerk, because prices are determined as far as market forces. And we've seen that bid up 40% since the start of the year, start of the month. So that dramatic move up, it's very, very dynamic. And this is the issue that one appreciates as far as energy markets, because of the unknown. And yes, you're right, as far as 25% of all crude comes through the Strait of Hormuz. But there are other issues. If they were to target pipelines, if Iran was to target shipping, the Houthis get involved, what happens with Saudis? All of these factors, again, create choke points, bottlenecks, and, of course, disruption. And, if this was to increase as far as the velocity of the whole situation, that would create, again, higher point as far as price. And that's the real issue, I think, that everyone's realizing.
It's a lot of sense. Peter, thank you so much for distilling that for us, if I can call it that, and simplifying it. But a very interesting conversation with you as always. And who better to speak about global crude than Peter McGuire, right? So thanks so much, though, Peter, for coming in and giving our viewers that perspective.
Thank you, Hirsch.
All right.